Good evening, ladies and gentlemen. I'm Hassan Tamiyagal, Manager Corporate Finance and Strategy. On behalf of my team, I would like to welcome all of you for first quarter results webinar for Sunshine Holdings PLC for the financial year 26. So to start things off, few housekeeping announcements as usual. So this webinar will be recorded and then later uploaded to our IR website along with this presentation. You can use the following link to access this recording. As well as the presentation. So all participants will be muted during the presentation, and during the Q&A session, you can use the raise hand option to ask questions, or you can use the chat box function to type in your questions as well. So similar to previous quarters, the presentation will start off with few corporate announcements and then group highlights for the quarter, and then followed by a deep dive into each of the business segments from our respective business heads. And then we'll finish off the session with a Q&A. Let me first introduce my team. We have Mr. Shyam Sathasiva, Group CEO, Sunshine Holdings PLC. Mr. Arnadipti Kumar, Group CFO, Sunshine Holdings PLC. And from the respective businesses, we have Mr. Shantha Bandar, who is the CEO of Sunshine Pharmaceuticals and Healthcare Distribution. Dr. Thiru Sayantha, who is the CEO of Sunshine Medical Devices and Lena Manufacturing. Mr. Farman Nizar, who is the CEO of HealthGuard Pharmacies. And then on the consumer side, we have Mr. Anuruddha Aluvihar, who is the CEO of Sunshine Consumer. Then Mr. Sanjeev Sarnapal, CEO of Sunshine Exports, which is the export arm of Sunshine Holdings PLC. So since there were no major announcements during the quarter, I would like to hand over the presentation to Mr. Shyam Sathasiva to kind of walk you through the group highlights of the call.
Over to you. Good afternoon, everyone. Thank you all for being here for our quarterly earnings conversation. We have very good earnings for the first quarter of the new financial year. The group has done quite well. We've had an 11% overall revenue growth driven by our healthcare. Healthcare, of course, is over 50%, nearly 54% of our overall revenues, followed by consumer at 30%. Healthcare has had a positive first quarter, and that's driven our overall revenues up. Agri has also done well on the back of volumes and pricing. Earnings has continued to be very positive for the group. We've had a 20% year-on-year increase of our net income at 1.7 billion. This continues from our efforts of driving cost savings as well as margin improvements. We've seen margin improvements, especially in consumer and agri, and those are positive. My colleagues will share further on that. Other metrics in terms of return on equity have continued to be high, and we continue to focus to deliver stakeholder value across. Let me move into some of the detail of the quarter. EBIT margins have been quite good. There's been an improvement over the previous year, same quarter, to 16.6%, and which has dropped down even into our PAT margins. This is again, like I said, coming from our consumer and agri having better gross profit, and those details will be shared by my colleagues later. Broadly, we continue to see positive signs for growth across all three sectors, which is also then translating to demand, following which we are able to have brand strength, or in B2B relationships continuing to be strongly engaged with our customers, so which is driving profitability as well. As you can see, we've also had a good quarter-on-quarter growth coming off 4Q. So the trends are positive into the new financial year. If I take you into where our results have come from, broadly, as you can see, healthcare has been where we've had revenue growth and agri. Part of also our improvements, primarily in healthcare, has come from retail doing well, our distribution business doing well. So this continues to be. We've had some reduction in our pharma manufacturing due to timing of government orders, but broadly the sector itself has different plays in there, and that's helped drive growth. In terms of EBIT, agri has been the biggest contributor. This is driven by the palm oil pricing being higher in this quarter versus previous year same quarter, as well as some volume increases. But broadly, we continue to show growth across our businesses. I will now hand over to my colleagues who will take you through the rest of the earnings, but I would like to leave with one slide which demonstrates a decade of progress for Sunshine. We have continued to focus on delivering results, and especially in the last few years, this has had an impact on the shareholder value creation. This just gives you a trajectory across, especially the last 5-6 years, as to how we've been able to drive better visibility of the quality of our earnings, the scale of our business, and the opportunities in healthcare and consumer sectors. And so we've had a good run of value creation, and we hope this to continue. Over to my colleagues.
Thank you, Sham. Let me take you through the good afternoon, everyone. Let me take you through the healthcare sector. The few slides initially on the overall sector. As the Group CEO mentioned, the overall sector actually reported a very good growth in the quarter, which shows a year-on-year 14% for the entire healthcare sector, which contributes to more than 50%, as it was mentioned, mainly driven by the agency business and the distribution and the retail, which has contributed during the quarter for this result of 14% growth, which is quite steady when you look at the overall industry is growing around 5%. So that gives us quite a good start for the financial year, where the quarter one has been a very positive start for us. And you may see that year-on-year EBIT and even PAT contraction is mainly due to the timing effect that we have seen in our manufacturing business, which I'm sure Sandhan will discuss in his presentation. And moving forward from the sector highlights to the pharmaceutical agency business, again, has done tremendously well with a 26.7 year-on-year growth. Again, the retail market was growing at around 5%, which is more relevant to this business, although I spoke about in overall sector. However, this growth is driven by one is from the organic growth that we projected, and also some of the internal alignments that we are doing in the company, that we are aligning some of our processes. With that, we have seen a growth coming in even for the pharmaceutical segment of the healthcare sector. Moving forward from the pharmaceuticals agency business to our distribution business, again, a very good growth for us recorded. Here again, stemming out from the new businesses that we signed up during the quarter and also the previous quarters. We have seen the new businesses picking up. That is distribution as a service that we have started the business with a few of the large players in the market, and it has been very positive for us, which is giving us the growth. And the quarter has been a very good start for this business as well. Let me hand over to Sandhan to take you through the medical devices and the leaner manufacturing. Sandhan, over to you.
Thank you, Shanta. So, ladies and gentlemen, I'll take you through the first quarter performance of the medical devices business. And as you can see, we have recorded a 1.2 billion business, which had been a 17.2% growth. And this is one of the excellent quarters for medical devices, because why I say is after a long quarters, we recorded a positive private sector growth, because growth was a key factor that we've been focusing on for medical devices. Of course, last year growth was governed by the government sector business, but first quarter we saw a greater growth coming from the private sector. especially for Johnson & Johnson consumable and the 3M consumable. So that drove the growth, of course, together well supported by the diagnostic lines by Siemens Healthineers and GE. So those were the main highlights of the Sunshine Medical Devices business, largely a volume growth contributed by the value. Moving on to Lena Manufacturing, once again, as you can see, we recorded a 0.9 billion quarter and we delivered 100%. So we focus on three segments for our local pharma manufacturing. That is the government sector where we supply the medical supplies division. We have our own brand focus, the locally manufactured respiratory products and the meter dose inhalers. And of course, we also have begun the contract manufacturing, contract drug manufacturing for other organization. So all three segments perform 100% for the quarter and we are on 100% of the budget. So those are the two highlights from medical devices and our own pharma manufacturing. And with that, I would hand over to my colleague Farman, who will take you through HealthGuard Retail. Over to you, Farman.
Thank you. So, ladies and gentlemen, so I will take you through the HealthGuard Pharmacy, the retail arm of Sunshine Holdings. So as you can see from the chart, quarter on quarter, we've been actually progressing very well. This year, we are closing with 17% growth versus last year, a 3% plus growth versus the previous quarter. And firstly, I like to qualify the fact that this is a wholesome growth. It's not a growth that comes because of price, because it is predominantly driven by volume. It's a volume-driven growth. And even if we take the new store out from the equation, we have a 14% growth at the same store level. So organic growth 14%, and that's very healthy. I mean, in a context where the Western province market, when we say for Q1 was almost flat, for us to grow this, we are very happy that several initiatives that we've taken have actually given us fruit. Now, some of the reasons that we actually see that has helped to get this growth, one of the reasons is the fact that our bill count has risen by 18%. So that is more people walking onto the store, more repeat customers coming to the store, that helping us to add up the business. Further, the last 2 quarters, we have been working on many engagement initiatives with our team. That has also helped in improving our productivity metrics. Along with that, if I were to comment one more in terms of the suppliers that are actually leading this growth, I think I would like to mention MR Chemi, then Sunshine Healthcare, also CIC. There are 3 of the suppliers or local agency houses who are actually leading the growth and keeping ahead in the pharmaceutical market share. Yeah, with that, I like to hand over now to the consumer business, and Anuruddha will take it from there.
Thank you, Farman. Good afternoon to everyone. So I'll start with the consumer sector highlights. The consumer sector in the Q1 of 2026 financial year have started with a 3.7 year-on-year growth, driven by both domestic and export business, both improvements in both the business, and that takes to 5.8% EBIT margin with 3.3% stable PAT margin. And that contributes to 12.6% ROIC. Moving on to tea. Moving on to tea. Tea revenue grew by 1.5% year-on-year, taking 2.3 billion incremental sales. However, the volume is at 1%. With core brands like Vatavala and Zesta showing resilience to the market's environment. Market share remains at almost, that is 47.6, despite in the value for money sector challenges faced by Rankahata. This is mainly stemming from the auction prices being lower, where the regional and local players are in the price war. Moving on to confectionery. Confectionery segment also recorded almost 20% growth year on year, taking both volume and value growth, very steady value and volume growth. This is mainly coming from the new product lineup that we have had for the Q1, starting from March to June. Very good NPD lineup. So that gives us additional volume and revenue to record this growth momentum in confectionery. And with that, I will hand over to Sanjeeva, who will take you through the export business.
Thank you, Anuruddha. Good afternoon, ladies and gentlemen. Let me present to you an overview of our export business performance for the first quarter in the financial year 25-26. In terms of volume performance, in the first quarter, Sunshine Tea achieved a significant milestone by exporting over 1 million kilos of tea, marking an 18% year-on-year growth in the export volume. This performance was primarily driven by the demand from Middle East and the Far Eastern markets, along with a notable uptick in shipments to the United States, particularly ahead of the anticipated tariff changes. Looking forward to Q2, we foresee a softening in the overall demand, with expected reductions in shipments both in the Middle East and the United States, and the latter being historically a strong market for Sunshine Tea. Nevertheless, the demand from the Far East region is expected to remain stable or show marginal growth, partly offsetting the anticipated declines in the other key markets. In terms of revenue performance, the total export revenue for Q1 reached rupees 2 billion, reflecting a 7.2% increase year on year. In US dollar terms, revenue also recorded a positive growth, growing by 8.7% in line with the increase in shipment volumes. Finally, in conclusion, the overall Q1 reflects a strong start to the year for Sunshine Tea export operations, with solid volumes and revenue growth supported by key regional markets, while short-term challenges are anticipated in Q2 due to the external dynamics. So let me now hand over to the agri sector. Hiran, over to you.
Sure. Thanks, team. My current role as the acting CEO for agribusiness Buttermilk Plantations. Let me take you through those results as well. So the agri sector, as I mentioned earlier in my introduction, has had good revenue growth in the first quarter, coming off volumes and pricing, primarily driven by pricing, and this is all in the palm oil sector, then less than in the dairy. If I take you through the specifics of the palm oil sector, where we've had nearly 27% revenue growth, as well as significant growth from the trailing quarter as well. The more interesting thing is, I think, our EBIT margins, as the Malaysian palm oil prices have held steady and increased. Our contracts have been of higher pricing, and therefore this quarter has been quite positive. We continue to see sort of demand in the market for same. And with this, we've seen significant improvement in profitability as well. Our metric will be to continue to drive volumes and to take advantage of this opportunity. So palm oil has had a very good quarter, and we foresee good results going forward. In terms of the dairy business, some challenges. We've had a dip in the production, as well as some softening of price. Both contributed to the nearly 14% revenue decline. But more concern for us is the fat decline. This is to do both with the margin impact as well as other incidental expenses in the business to deal with waste, etc. So we continue to see challenges in this sector. Our herd health is quite good. Our productivity is reasonable. We've just had a low sort of milking herd at this point in time, and we're working on fixing same. So overall, agri has had a good first quarter, like I said, driven by palm oil, and we hope to continue to do so. So that brings us to the end of our sectoral analysis. Asanta?
Yeah. So thank you, team, for this detailed insight into each of these business segments and into each of three main segments. So with that, we can move on to the Q&A session. So as I mentioned at the start, you can use the raise hand option. I'll unmute and you can ask your question. Or if not, you can type in your questions in the chat box as well. We have a question from Tanushi. We observe a 74% capacity utilization in the leaner manufacturing segment. However, the revenue has seen a 19% drop year-over-year. Is this reflected in the inventory, or how has this drop occurred despite the higher capacity utilization? Sayantan, over to you.
Thanks, Tarshi, for that question. So actually, if I explain the capacity utilization, which I mentioned was of the meter dose inhaler line, which is our main contributing line and a strategic business line as for leaner manufacturing. But if you go and detail, leaner manufacturing have 6 lines. We have the capsule line, the nasal spray line, the device line, the tablet line, and the cream line. The decline is due to the capsule line because of the timing variation as mentioned in the presentation. And also the government having stocks of last purchased items in their inventory. Our capsules line capacity dropped from 76 to 42. Those are the precise figures. And that's the reason for the revenue drop. So that's the reason, though the MDI line went up in capacity utilization, the value drop came from the capsule line. Trust I answered that question.
Thank you, Sanjay. Shanta, question to you from Shalini. What caused the market share decline in the pharma agency business?
Yeah, thank you, Hasanta. Actually, Shalini, there are a few areas of where we were not in line with the market growth. One area was for us was the insulin, where we saw there is a market share drop in our insulin business. That is mainly due to one could be affordability as well. However, the main reason that we saw was the shift from injectables to orals, because there are new diabetes treatment which has come into the market. You may have heard of empagliflozin and dapagliflozin and various combinations also coming into the market. So where we saw that some of the market shares moved into those, whereas some of our own agencies who had empagliflozin and dapagliflozin could not pick up the market trend, where we saw local players, there was a price war in those areas. So we saw that a little bit of shift from our insulin business, and also some of our key agencies also lost a little bit of share due to their volumes being taken by their competition. So these are we see as temporary drawbacks in some of our strategies of some of the principal agencies, and we see quite positive trend in Q1 as per the results you see. So we hope to pick up those market shares in the future.
Thank you, Shanta. Another question from Talushi. This is regarding the consumer sector. Could you shed some insight on the impact from the drop in tea auction prices to the overall consumer sector EBIT recovery?
Yes. So, so the market price drop in the auction price drop in the tea segment has significantly impacted in the EBIT. it helped us to get more EBIT percentage achievement in Q1. But however, this has a negative effect as well, where this is mainly for mass market, and which is Vatavala, and the premium market, which we have Zesta. This was a good situation, whereas value for money sector, we got impacted negatively because the lower prices allowed the local regional players to buy more and sort of offer more trade support and shopper consumer support as well. So therefore, we had a negative impact on value for money segment, whereas it was a very positive impact towards the other two categories, and hence overall this was significantly helpful in getting the EBIT for tea category in Q1. I hope I have answered that.
Thank you. Question from Dinesh. Dinesh, there has been no palm oil being planted since the palm oil ban. So I hope that answers the question, and we'll move on to the next one. Question from Ruchi. Pharmaceutical distribution revenues were 27% year-over-year growth versus industry growth of 5%. What is the main reason for this? Shanta, over to you.
Yeah. So mainly coming from our new accounts, as I mentioned, because we were able to sign up some of the new accounts like Cipla signed with us, Micro Labs. These are some of the leading brands, owners, manufacturers, and these have brought us some good revenue boost, and also some of the model changes that we took from the pharma business to our own distribution business also increased the revenues in our distribution business. But I think the future is signing up new accounts. So we see this inorganic growth coming into the business, and that is very positive for us.
Thank you, Shanta. Question for you, Anuruddha, from Krishna Kumar. Can you give us some details as to what new product launches drove the confectionery segment?
Yes, so we have launched about 6 new products during the quarter, and of that, the highest or most successful one, I would say, the My Lady Lollipop. We came out with a My Lady Lollipop, which is the popular hard-boiled toffee category. We extend that into lollipop. That gives a significant contribution. On top of that, we have introduced jelly crystals. Jelly crystals, too early to comment on the progress of the jelly crystals, but that also the acceptance and the quality, the whoever who has tasted is getting good comments. Plus, we expanded the snack category to larger packs. That also giving a good results. Too early to comment on the progress. One of the very successful new product was the orange toffee in the hard-boiled category. That also we surpass all plans for the plans for the launch period and giving a successful results. So altogether about 6 launches we did. All 6 are currently doing very good, I would say.
Thank you, Anuruddha. Question from Puhan on the pharma manufacturing side. How do you view the upcoming commencement of Synergy Pharma Manufacturing Plant impact the competitive landscape of the local pharma industry? Do you expect any direct competition stemming from this new addition? Sign the new one.
Sure. So to answer that question, so definitely Synergy Pharma coming into local manufacturing will strengthen all the local manufacturers because if you take the government sector, the local manufacturers supply only 30% of the market share in the government sector. And if you take the private sector, the local manufacturers contribute only 5%. So overall, more manufacturers coming in, more molecules being produced in Sri Lanka will strengthen and will synergize all the local manufacturers. Talking of direct competition with Lena, thankfully no, because the lines that they are putting on doesn't directly compete with Lena, because Lena, we are pioneering ourselves in the respiratory medication. As at today, we are the only metered dose inhaler manufacturer in Sri Lanka. And if you take the dry powder capsules, which are used for asthma medication, there are only two manufacturers, and the orders have been split. So the new entrant to the market have not indicated to get into those lines. And even if you take the nasal spray line, there are only two manufacturers in Sri Lanka, one being Lina. So there won't be any direct contribution. Unless and if we scale up our tablet line and compete some of those lines, we don't intend seeing any direct competition coming from the new manufacturer.
Thank you, Santha. Shanta, a question to you from Tarushi. If there's a shift from the type of insulin drugs toward orals, would this be a long-term impact to Sun market share, or has Sun already taken measures to manage this?
No, it's a very important area. Actually, there is an impact because of the shift of certain treatment protocol and treatment new trending treatments coming in, and some taking orals as a more feasible way of managing. So our strategy also is to shift some of our portfolio into these new trending segments. So we are already working with some our own principle as well as the new principles to bring certain trending products. You will see that in the near future.
Thank you, Shanta. Another question from Ruchi. Do you see the consumer demand environment in a much better position compared to the start of the calendar year? Anuruddha?
Yes. So we expected this to change a much better demand in the consumer sector, but however, it is not so because the disposable income, we thought with the tax introduction and all that, the income was not as much as what we expected to sort of spend in the marketplace. So that initial anticipation, even when we set in budget also, anticipation was that there will be an improvement in consumer purchasing power parity. But as of now, we have not seen a significant improvement in that area.
Thank you, Anuruddha. Question from Shalini. When do you foresee a decline in water yields due to aging plants? What are the measures taken in this regard?
Sure. So we are, to an extent, past our prime in about, I would think, 10% to 15% of our fields. Broadly, 25 years or so would be a good time to replant as it becomes tall palm and more difficult to harvest. Of course, what we have done is worked on certain productivity metrics as well as agronomy metrics to drive greater production. So our yield by hectares are holding well. We're continuing to lobby with the government to allow for planned replanting. But for now, I think we should be able to balance between the declining yields and increasing ones into the next 3 or 4 years, before which it becomes more of an issue.
Thank you, Shah. A question from Dinesh. Is there a lock-in clause for the Akbar Brothers stake? Wondering if there was any impediment to these shares trading.
No, there's nothing as such. It's free float sort of shares. They've chosen to move from our healthcare stake post the merger into Sunshine Holdings. And they're quite, I think it's open-ended. I think they've done very well. But no, there's no lock-in. It's as any other shareholder.
So if there's no further questions, we can wrap up the session for today. On behalf of Sunshine Holdings PLC, I would like to thank each and every one of you who joined this quarter's webinar and hope to see you all again in our next quarter webinar as well. Thank you. Have a good day.
Thank you.
Thank you.
Thank you.